How are you all doing? Happy Friday. Christmas now. I'm full in Christmas mode. I'm just waiting basically for Christmas now. So not doing any work. Um, I got quite a bit covered this morning, obviously on the rates yesterday. I need to sit down and do some analysis on what came out of the press conferences and the monetary policy statements as to what they're going to be doing. So I need to spend a bit of time on that really. Morning, Alex. Morning, Jane. Morning, Jacob. Johannes, German, Stevie. Made it to Friday. Made it through the week. The week of hell. Aussie New Zealand at last week's. Yeah, Aussie New Zealand didn't impress me yesterday. Yesterday I was looking for new market structure from there, and we got that. So we'll need to see what happens at that low today. I will probably start to scale out of a bit of this and take a little bit more loss on this if it carries on a little bit below there. But on the plus side, I've got New Zealand dollar CAD cancelling it out because I'm short New Zealand CAD. We came straight back down into support and bounced from there, but it's looking fairly heavy this morning. So if I can get a push down on that and get a bounce off of that double bottom on Aussie New Zealand, I'm pretty much break even at just above ADR now. So if I can get down to there, that'll help with Aussie New Zealand scaling. But yeah, not going well at the moment. Aussie New Zealand's still an absolute mess. I've started building. I've decided I remember I spoke about scorecarding, and I was building a fundamental scorecarding spreadsheet. And then I came across this company, which Alex put me onto, that does they do very similar to what I do, but they're organized. So I was looking at buying theirs and just letting them do it, but they don't do it exactly as I want it done. And it's always the same with me. I always find indicators that do kind of do it, but don't quite do it. So I build it myself. And I built my own scorecarding system, which I'm finishing off at the moment, which will obviously give a much better fundamental bias. I think moving into next year, I really, really want to concentrate on fundamentals a lot more because it is just fundamentals driving this market, obviously, at the moment. It always is fundamentals driving the market, obviously. But at the moment, it's much more important because it is all about interest rates. And we want to make sure that we're on side with the major market participants for position trading because the moves that we're getting, these like the Aussie New Zealand, I know exactly why it happened. But I need to be getting out of these faster when I know that the fundamentals have shifted. So, fundamental shift is quite often fairly temporary. Squeezes like this come about when we have something going on with interest rates and inflation that is completely off-sided, basically. So you've got one side massively weak, one side massively strong. We need to know that. And then it's a personal choice as to what you do with that information, isn't it? So I put my own system together, which is exactly what the central bank analysts do. It's all about scorecarding. This is why we have directional bias, because the analysts scorecard what's going on with inflation, interest rates, unemployment, everything. And they give a mark out of X and Y, plus or minus, and that's the direction they go. Want to see more? So I've built my own one basically to take all of that into account. So it will keep track of everything and give each pair a score. Unfortunately, Aussie New Zealand is a massive negative at the minute. But, I'm working on that at the moment. That's what I've been working on for the last couple of days. And when I've got it finished, it's all automated, so it drags all the data in from various sources. and it'll be updated on a daily basis. But I'm just trying to figure out the scorecarding system. So I'm rewatching Anton Kreil's videos from his fundamental course. His is kind of the other end of the scale. This is the problem, see, with with everything that everybody does in trading. It's always fine-tuned to them. So Anton Kreil's course is very, very intense on fundamentals. He's an ex-banker, and he knows what he's talking about with this stuff. And but it's almost on an economics degree level. Whereas the other guys that I found that do a scorecarding system, it's kind of almost dumbed down far too much for retail. So there's an area in the middle I need to get to for what I think is what's important and how I should weight everything based on current climate. In 2024, the way that I weight things will be different, because I will be paying much less attention to interest rates and inflation and more to other factors. So you need to change your weighting as well, dependent on what's going on in the climate. What's driving the markets at the moment is going to be different to what's driving the markets in 2024. So I'll be working on that. I'll have that ready for January, and that's going to form my new fundamental bias. So I will be trading in those directions. And the other beauty of this type of scorecarding system is when you get things like that, you can hedge it. So basically, I would expect that to go into a range. And then when you get something going into a range like that, you've got opportunities on the RSI extensions to just get in long and short every single time it hits. And then if the fundamentals shift and go away from you, you can go into positions on them, as long as it's not shifted too far. So it's just kind of another tweak on it. I was relying on the COT report, obviously, previously. But the COT report is only one part of the equation. Where retail is positioned changes, and it's also delayed. So you've got to make sure that the COT data is lining up with the interest in inflation, and if that lines up with that and that, you should score it higher. There's all sorts of little things like this which no one does it exactly the way that I want it done. So I thought I'll build my own, and we'll use it next year. But anyway, so that's what I'll be working on. Let me quickly run over yesterday. I just want to see what happens at the market open. We are open. So yesterday, obviously, we had all the rates. So things like this that's just come in from Muller. Rates are likely to raise more than markets expect. Again, massive hawkishness. When this thing, right, on a scorecarding system, for example, that's a big +1. Yeah. So it's one of those things what's happening now with interest rates, now with inflation, is fine. We need to know that there will be a bias formed by those two things. What they are planning to do in the next 2 to 3 months is arguably more important, because what inflation and interest rates are now is going to have an impact now. But what's going to happen in the future is where the market participants are going to take price. So if they're massively hawkish, like Muller is here, then you need to be buying the euro over the next month to 2 months, because the market is going to be also doing that. But the COT positioning will tell you that part of the information. COT will tell you what they're doing. But we don't know. We're always at least a week behind on that information. So it's no use to us today. What they're doing right now, we will know because the market will go up. We won't actually get the data on that until Friday next week. So there's all sorts of things like that. But that this is all going to be sort of factored in. But it's the maths. I need to just rewatch some basic fundamentals. I've got two really good courses on fundamentals. One's a kind of dumbed down version, and one is Anton Kreil's. They're both a good week of watching. So that's my Christmas done. On obviously 150%, because certain educators you have to listen to faster. But Yeah. Anyway, that's my plan. So yesterday's interest rates. I just need to keep an eye on this because I've got the EA running on here. What a beautiful day yesterday. My God. I don't know if has anybody got the ORB EA, and did they let it trade yesterday? If you did, well done. I made 2.5 grand on this yesterday. But I had a 250 stop on it, a 25-point stop. So we opened up there. Where are we? Oh, that's a DAX. Well, anyway, it doesn't matter which one you look at, basically. But this thing just went yesterday, and went and went and went. Nasdaq yesterday, from market open there. That's market open. So opening range breakout was there. I got out here yesterday, and then obviously it just went all the way down to there. So if you'd have taken an ORB with anything less than a 25-point stop yesterday, well done. Passed an evaluation in a day. So yeah, lovely breaks yesterday, wasn't it? So I mean, it was like that every day. Want to see more? Looks similar to a correlation. Looks similar to a correlation chart I used to use. Correlation table. Yeah, you can use correlate. Yeah, I mean it's fundamentals. It's different. Scorecarding. I haven't done any part. There's no part of the bootcamp that talks about scorecarding. But if you don't know, the banks and institutions all use what's called a scorecarding system. So they take every piece of fundamental data and they allocate a score to it. So GDP will have a higher score than I don't know. These are all massive ones this week. There's nothing that hasn't got a low score here. Retail sales. So GDP will have a higher score than retail sales. Rates and CPI figures will have the highest score. So they might give this an allocation of 10 points plus to 10 points minus. And depending on what the figure comes out as, they will either then score that as a -3, for example, or something. And then they'll score that as a +2. And then they'll score something else down here as a -1. So basically, you've got a -1 overall on those 3 news events. And every single piece of news that is released economically will have a different scorecard and a different weighting. And at the end of the day, what they get is a rating from, I don't know, -20 to +20, for example. So if we're sitting at +12 on the US dollar and we're sitting at -6 on the pound, you want to be buying the dollar and selling the pound. So pound US dollar would have a directional bias. And that's basically the way that the institutions work, because we know that certain things are positive for a currency and certain things are negative for a currency. So when you have one currency with a massive plus, one currency with a massive minus, that gives you a bullish bias. And they just continuously buy that thing until news comes out that tells them that economics will change, currency values will change, and things will go down. The main thing is interest rates, because interest rates give you a positive return. So if interest rates, so the highest interest rates at the moment are 4.5% for the Fed, for example, it's in our interest to buy the dollar. Why? Because we're going to earn 4.5% on it. We've got -1 on the yen. So what's the best thing to do at the moment? Buy the US dollar yen. Simple. It's not as simple as that, but that's the dumbed down version of it. So that's what I'm building, my own version of it, with my own weightings. But my own weightings are going to be pretty similar to most other people's weightings. And you don't want to overcomplicate it, because you could go with like a +100 and a -100, but then this is such a big scale. So I'm trying to keep it down to sort of 14, 15. So a mark out of 15. So if you've got like a -7 or a -8, these are strong sells at the minute. I haven't updated this, by the way. This is not live data, so don't use it. But anyway, option to test that data. You can't really test it. It is what it is. I'm not doing historical data, if that's what you mean. Yeah, I mean, you could do that. The other company that they've got a back testing system, but there's no edge in it. There's no actual edge that I could see. Overall, directionally, it's quite often right, but it's not. The market doesn't do that, does it? The market does that. Yeah. So if you've got a massive bias long and you buy it there, you're going to go into drawdown. So all it is a gauge to say when we see a dip, buy it, or when we see a spike, sell it. But don't necessarily expect it just to do that. It will do what it wants. There's no magic bullet. The institutions get it wrong. COT bias, prime example. Huge long bias on something on COT, and it will go down for weeks. But it will go down for weeks because the huge long bias on COT is trading 3 months. So yeah, it can go down for 2 weeks, but they are looking for a 3-month return. So it will be where they want it to be in 3 months' time. So if the COT bias, for example, on something is, I don't know, just try and find it, 69, that's not. So for example, Swiss franc, 91% of participants are short the Swiss franc at the moment, right? The Swiss franc, they are all short Swiss franc. It's going down. The US dollar is going down against the Swiss franc, which means what? The Swiss franc is strong at the moment. Does that mean that those participants are wrong? No. What it means is at some point, this will go like that. But doesn't have to do it for this couple of weeks. In 3 months' time, they're expecting a return on investment. Sorry, I just want to see why the EA hasn't fired this morning. Am I missing something? It's 10 past. Why am I not trading? Sorry. One sec. Where's the... Oh, it has fired. A long. Right. Oh, okay. I just need to be... cancelled. So there's an issue with the opening range breakout strategy. Where did that not place a sell? Oh, of course it didn't. Because it's only trading the 10-minute. Why did it not place a sell there? Oh, I need to look into that one. That one's not fired for some reason. Yeah, with 33,519. 33,655. What? What's the date? Didn't even attempt to place a sell stop, did it? Why was that? Stop by stop. Anybody got the ORB running this morning? I suppose it depends what set file you're using. Hello, why can't I trade? What's going on? Why is nothing working this morning, guys? What's going on? Oh, I'll deal with that in a minute. Right, sorry. Market reactions based on consensus. My brain just sees calculated data and thinks, ooh, analyze. Yeah. I tried your opening range breakout EA demo yesterday, but it doesn't have DAX, DAO, etc. Only Forex and gold. My design or an issue at my end. What? What are you talking about? The EA doesn't have anything. No, the EA is in EAs are in EA. There's nothing. If your broker doesn't have indices, get a different broker. Basically, it's an issue your end. Nothing to do with the. I'm not quite sure I understand the question. That doesn't make any sense at all. I have it running on DAX set 1 on E8. I've got all running on demos. Placed a buy stop, but not a sell stop. Yours did the same, did it? Right. Why did you not place a sell stop this morning? Can't actually see a reason in the journal. It just didn't bother to place a sell stop, did it? Yeah, I'm only playing the 10-minute range break. Okay. I need to look into that. It's very weird. And this EA is why is not working? Why not working? Auto trading turned on. Okay. Yeah. Oh, what on earth is going on? Sorry, bear with me a second. Let's just call it Pat. Yeah, I'll do whatever. Shut up. Sorry, I will do some stuff in a minute. Oh, I'm just gonna have to sell now, aren't I? I don't know what's going on this morning. I don't know if this is. What are you running on it, Alex? You're running on EA, are you? No, it's not an my Forex funds issue then. No. Weird. Anyway, taking an opening range breakout low. Broker does have those indices, but in the strategy tester dropdown where you select the instrument, it doesn't show the indices. Restart your platform. There's something wrong with it. I don't know. It does shows them all. Everything you've got, everything you have, it will only show you Market Watch. Yeah. So if you don't have it in Market Watch, it won't appear in here. But that's just basic MT4 knowledge. You should know that. Well, you shouldn't know that if you don't know, obviously, but now you do. So yeah, that'll be why. Why is that not triggered? That's going to bug me. There, I hate bugs. Need to squash it. I have to have a look at the logic. Trouble is, this is the trouble with back testing. This is why you need to do live forward testing, because things like that happen where it doesn't trigger, and you're like, why? And it hasn't even attempted. So there's obviously something in the logic, or to do with the timing in the logic, where it wasn't able to place a trade, but everything is logged. So in here, it would say, I tried to place a trade, but I couldn't because. So it's the 16th, which is there. It hasn't even bothered to try and place a trade. Anyway, it's a problem for me. It's not a problem for you. Right. So let's have a look at where we are. Interest rates yesterday. So we obviously had a massive day. We've got PMIs this morning. So the PMIs have just come out for the euro. Positive, negative. So the services is a miss. Then we've got 8:30, we've got the German, and then at 9:30 we've got the pound, and then we've got the US dollar this afternoon, 15 minutes after market open. So fair amount of news again today, which it will move the market, but I wouldn't expect to get any massive runs on it. So yesterday, obviously, all interest rates came out as expected. So we had the SMB at 1%, we had the euro at 2.5, and we had the pound at 3.5. So everything as expected. I need to sift through the monetary policy meeting minutes, or rather go and find somebody that sifted through them and see what the news was, and find out what their forward guidance is. So the forward guidance is what we're interested in. So for example, on the euro, Lagarde, I watched the press conference yesterday. Yes, I'm that sad. And Lagarde was basically saying we will be hiking rates substantially, and we will be doing it for months. So she has confirmed that in all likelihood a 0.5 increase, which is what we had yesterday, a 0.5 increase for at least the next 2, possibly 3 releases. So the next quarter, I would expect the market to be buying the euro. Pound, I haven't managed to look at, and neither have I looked at the SMB. The only reason I know about the ECB is because I watched the conference. So I need to sift through the monetary policy statement, basically, and look at what the, for the other two, basically, and look at what their forward guidance is. And their forward guidance will be based on inflation forecasts, etc., etc. So yeah, basically hawkish euro, bullish euro so far yesterday. Obviously that can change from month to month to month. It all depends on the figures, doesn't it? So, but yeah, across the board, massive bullish sentiment. Obviously, massive bullish sentiment is negative indexes, and boy, did we get negative indexes yesterday. So yeah, bullish euro, huge negative DAX. This is the move that I've been waiting for. I've been talking about this move, haven't I? And you know what? I didn't get on it. But I did get on it a bit, but I didn't get on it much. This is the move I was waiting for. I got out of my DAX trades on Tuesday. There, what's that? Where are we? Thursday, Wednesday, Tuesday. Yeah, so I got out of my, no, sorry, I know I got out of my DAX trades earlier than that. I got out of my DAX trades down here because I was just fed up waiting for it. This is exactly the candlestick that I was waiting for, that I said was on its way in all likelihood, and it came and I missed it. But so next leg down, potentially starting, we've got a massive sort of potential support back down here. Call it the 200, call it the 72, what you want. It's that area there. So that is where I would expect to get to. I wouldn't put it past another ADR today on the indexes. So another ADR push down to 125, 150, possibly on the cards. So we'll see what happens. But there is also the possibility of a retracement today up into the middle of that candle. I'll be looking to sell it up there if we get up to there as well. I said I wasn't going to trade, but we've started the moves which I've been waiting for. So there is a possibility, I think, next week that we might get some decent movement, but we will see. But I'm just going to be watching really most of the time, and I'll take the opening range breaks. And if they're good, they're good. If they're not, they're not. But yeah, so huge drop yesterday. Nasdaq dropped out of bed. Dow dropped out of bed. S&P, same thing. FTSE didn't do a lot. Nothing to do with the pound or the FTSE is actually very fast at all at the moment. But so yes, a really good downward momentum on the indices. So hopefully we get that move to the downside started. We've got the reverse alert on the daily there, but we need this area here. So this is the news on the US dollar, which obviously rallied the indices, weakened the US dollar. Since that news, we have literally just been sitting sideways in a range, playing around in this range. This is the propulsion gap, obviously. Now we're retesting the propulsion gap. So it's whether or not we find any buyers in here. The market obviously was bullish on indices, bearish on US there. The US rates and everything weren't particularly bullish, weren't particularly bearish. So forward sentiment on the US dollar is cloudy, which means that we could well see a slightly weaker than expected US dollar, which means we could see a rally on the indices, but we will see. Can't really tell anything at the minute until the market really kickstarts. And this is a very, very difficult time to understand which direction the market is wanting to head, because there's very little liquidity and the banks aren't trading a lot because it's Christmas. We're all shutting down. So any price action you get, which is like a huge move to the downside or a huge move to the upside, isn't necessarily speculative entries long or short. It's slippage, like liquidity. We don't know. There's no way of telling. But if we get the way I say that's tell a lie. There is a way of telling. If you look at the futures market, you'll need a futures system like Jigsaw or Ninja, etc. But if you look at the futures market and you see very large movement on daily candles on reducing volume, that tells you it's slippage, which is not a real move. So if you see volume levels maintained as normal and you see movement, that is proper speculative positioning, i.e. what goes on the COT report. If you see big movement and the volume goes like that, that means there's not a lot of people trading, therefore price is moving further to find people to fill orders, slippage. But that's kind of something to look at next week, really. If you're trading. If you're not trading, forget about it until January. So yeah, so it looks like it's starting. So obviously all these indices, we're looking for continuation shorts across the board. So yeah, I mean, it all looks like we're starting to roll over. We've got the liquidity run there on the Dow. Next leg potentially underway yesterday, so we'll see. Oil yesterday, again, another little collapse on oil. We'll say not a collapse on oil, but a pause. So I'm still bullish on this. We didn't get far yesterday at all. We're coming down a little bit today. So we got this lovely reversal M pattern formation. So we're looking for a retest now. So retest obviously is anywhere kind of up to that area there, potentially, or just literally an accumulation push. So, with the trend, you either get that kind of price action, yeah, where we're basically coming back up and retesting previous support, resistance, whichever way you're going, or you get a push down, an accumulation, a drop, an accumulation. So looking at this in reverse, market structure could be doing that, or it could be doing that. Yeah, but either way, if we're bullish, I'll be looking for buys down there, or I'll be looking just to take range breakouts, or the next bullish engulfing, assuming we're going to do that. Up to you. But obviously, market is overall bearish at the moment. So where can I see information regarding the opening range breakout EA? On the marketplace on MQL5. There's a link in are you in the Telegram group? I haven't put a link in the pinned message, have I yet? I haven't done anything with it yet because it's a very soft launch. I'll find the link, hang on. But yeah, oil basically, Jesus. Posted a lot of crap in there yesterday. There we are. There's a link. So yeah, obviously oil, we are massively bearish at the moment, but with oil, we've got all this stuff going on with Ukraine, with Russia, etc., etc. So where we've pulled up into right here is a slightly worrying area where we've got the reaction. So obviously, if we're going to continue bearish, this is kind of a 24 bounce, isn't it? But I don't know, difficult. I still think the market wants 90 to 100. That's what the market is saying. It's factoring in, and the market is usually right, obviously, because the market is what makes the market. Yeah? The guys that say we're going up to there, they're the guys that have the power to move it up to there. But with a commodity, it's not really as much in their control as it is with an FX pair. With a commodity, there's a lot of supply and demand issues that cause price differences. So they're not always going to be right on the commodity side of things, are they? So I think with oil, you need to pick a bias. It's the kind of instrument you definitely want to be trading with a stop, I think. So have a crack. If we take out this low, look at it on the hourly. So that low there, which is previous day's low, which is the support resistance there. So previous day's low. I reckon we'll either do that today or we'll come down and we'll retest. That's a propulsion gap. So we'll either retest that or that, which would be an ADR. That's assuming we're bullish, obviously. I don't know whether we're bullish or bearish, do I? But that's your plan. 3 short on DAX. It's 0.5%. Do I want to take this today? No, I don't. German, so PMI figures have just come out for Germany. Negative. I think actually, no, sorry. Positive. Yeah, that's great. So positive euro, negative index. Should see a drop in the DAX. It's already dropping though, so how fast or hard that will be, I don't know. But so yeah, I was just looking at where we're going in the DAX. So we're down in clear air here. So this candle here, there's nothing, obviously, no support or resistance at all until we get back down to here into this accumulation break. So this is a propulsion gap. I haven't got the indicator going back far enough. Let me just change that so we can see it better. Okay, so this is a massive propulsion gap. So potentially this is where we're going to find some buyers wanting to add into that position. However, this is a very old one, and we've sat through weeks and weeks and weeks of going nowhere. Anybody participant-wise that caused this move off of the news is probably either out or has readjusted that position. So I'm not sure how effective that will be. But that's where I would expect us to be heading to. And obviously, like with anything, how we get there is going to be dependent on how much money I make. So I'm running the EA on a, how am I running the EA? On a 15 period moving average trailer. Yeah, so I'm running a 15 period moving average trailer. So when we break back above the 15 MA, that's when I'll be getting out. So that you can see my stops here. So, as long as this thing does that on its way to it's 150 ADR basically, isn't it? Today, I will make an absolute fortune. And this is what the opening range breakout EA is designed to catch these days. These are the days you make 8 to 10%. If it chops up to there, I will get out with a loss, unfortunately, on all three of those positions. But I'm actually, this is adding, so this is really aggressive because I'm using this a different EA. And I'm not going to explain. This is not the opening range breakout EA trading at the moment. This is me manually doing it because the ORB EA, for some reason, didn't take a short this morning, which I need to look into. But the strategy is pretty much the same. So in effect, this is working as if you had add to winners, add to singles turned on, but I've actually taken 2 instead of 1. So it's kind of a little variation. I'm manually trading it basically, but in the same. Do you have a MyFX book public tracker? No. It's a brand new EA and I'm running it on prop. So no, because I won't keep props for that long. But I put all the backtesting in there and you can backtest it yourself. But backtesting is backtesting. It's got nothing to do with forward testing. So, with any EA, and I've said this many times before, I could give you the best results in the world if you like, and I can make you a multi-millionaire on paper. But next week, the market's going to do something totally different to this week, and you won't get the same results at all. But backtesting will give you my backtesting results that I've put in Telegram. That spreadsheet is what's called robustness testing. Yeah, so I have tested the EA with 40 to 50,000 variations of each setting, and it's come out profitable on 80 to 90% of them. So as far as I'm concerned, I don't care what you put into that. So if you go into the EA, yeah, and you go, actually, I'm going to change that to 200. I'm going to change that to 400. I'm going to change that to 800. And you put that on your system, you will be profitable. Because I've tested it, every single variation, and pretty much everything works. So it's a robust, what I call a robust EA. But a robust EA is not going to make you a millionaire. It's just basically going to, long term, over the next year, make you somewhere between 50 to 100 grand. It's not, but I don't know what it's going to do because I can't see into the future. So I can put a MyFX book up, but I run it on prop, yeah, and I'm going to blow this. This prop account that you're watching right now, this year, in the next 2 to 3 months, is going to be blown because I will trade it, pull out 15, 20K out of it, and then I'll aggressively blow it. And then I'll start another one. And that's what I do. I have multiple props. So I've got 350K running on prop across multiple accounts. I've blown 10 this month. But I draw loads of money out, and that's the way I do it. So I can't run in my FX book because I don't have one account that is running it. Unfortunately, it's not the way I work. I could set up an account, but I don't. I can set up a demo. That's not a problem. I can set up a demo, definitely. But again, the question, and this is the same thing I get asked with the other EA. I'm not having a go. I'm just telling you how it is. Which set file do you want? I've got 45,000 combinations of set files I've tested. Which of the 45,000 do you want me to run a test on? A live board test? Because I don't know which, you pick one and I'll use it, I'll do it. But I've launched 8 or 10 set files with it out of the 45,000 I've tested. But I don't know which one you want to see. How do you want to trade? Do you want to be aggressive? Do you want a home run system? Do you want to get paid 8 to 10% on single trades every few weeks? Or would you rather have a 0.5%, 1% gain every couple of days? It can do whatever you want. And that's why I set my EAs up like that, because I want people to be able to use them how they want to use them. There is no one way of trading. Look at what I'm doing this morning. This is a hybrid strategy with the Price Action Toolkit and the opening range breakout EA. This is, I will close it out when I'm ready to close it out. There's no kind of one shoe fits all, if you like. So, but I can certainly do a MyFX book or something. I can set a signal up. I've got a signal on on MQL5 for the market reversal alerts EA, that's running one set file. It's been running for a year and 2 months. It's made 100 and something % return, but it's one set file. Market reversal alerts EA has over 1 million different combinations of settings. But people want to see something, so I show them something, but it's not, I don't know whether you want to trade that. It's up to you, isn't it? Do your due diligence. You've got to do your own testing. I very much believe in doing your own testing, because what you think is good and what I think is good is a different thing, isn't it? Or whoever. What I'm looking for in a prop EA is something that will return me $20,000 to $50,000 a year. And I don't care if it draws down and I don't make money for 1 or 2 months. But what I want is a long-term edge. Most people are looking for an EA that will generate a 1 to 2% return a day, which, I can, this EA will do that as well. But it won't do it for long. It will blow the account at some point. So it depends what you want. There's settings to pass, there's settings for long-term gain, with every EA, not just my EAs, any EAs out there. That's how they work. No one size fits all. I think I might take this 0.5%. Aussie CAD coming down. Yesterday it did, yeah. Not today so far. Yeah, Aussie CAD is the same as New Zealand CAD. We got a lovely move on this yesterday on the CAD strength. I'm in New Zealand CAD, which is pushing up a little bit this morning. But yeah, nice moves on Aussie CAD. We're in this balance at the moment, area balance, accumulation range, whatever you want to call it. But this is an area we were happy to transact at. So the market's happy to trade here. So we might find we get into that, but to get below it, it's going to take quite a lot of selling pressure. We're already quite exhausted. So not quite got an extension on the 4-hour. The hourly, I think we'll probably have an extension on. Oh, we've had it yesterday. So we're quite exhausted down here. This is the area, obviously, zoomed in on the 1-hour chart. Prior to that, you're looking at a 150 ADR move back down into here. So if we can crack that low today, basically push down to ADR, I think we're on a drop. So looking good. If we get down to 13,500 on the DAX before Christmas, I might start flat into the new year. 13,500, is that where you need to get to? That's a long way. Before Christmas? Oh, yeah, I mean, it's totally possible. The problem you've got is there's no news next week. So the only thing we've got next week is monetary policy out of Japan and Canadian inflation and GDP. Apart from that, we haven't got anything really to move the market next week. So this is what I mean. Next week is going to be very difficult to know what's going to happen. It's either going to be a really flat week or it's going to be a lot of slippage and movement. But you can never tell. So yeah, I mean, there's every chance it could drop further. And a couple of ADR hits and you're pretty much there, aren't you? I think it's definitely on the cards. Look at it on the daily. This is the move I've been going on about for the last 2 weeks. This is the move I've been saying, when we get this, it's going to open the floodgates if we can get it. Well, we haven't managed to get it. And this is the first yesterday on all the interest rates. Now the market knows what all the interest rates are. Now the market knows what the forward monetary policy is and the inflation estimates are. Now we can start going. We haven't got a clue where we're going because we haven't got any forward guidance yet. Now they've got forward guidance. They're certainly on the way, aren't they? But is it, and this is the question, is it a liquidity run on the long players or is it a move? That's what we need to wait to find out. And that's what I'm saying is the difficult thing to forecast because we're at Christmas now. Everyone's shutting down. So you don't. It's like you can't believe the price action. You can this week, but next week you won't be able to, which is why I think next week we'll probably get lots of inside bars and lots of range high and low plays. But equally, we might slip. You just don't know. It's just, you never know, do you? We're looking fairly bullish. Might just take this 0.5% this morning. I would normally leave the EA to run, but obviously the EA didn't take this. I did. So this is annoying. Actually, I'm trailed in profit, aren't I? I had a good day yesterday. Look at it. Not need to get. That's where my goal is on medium term. Short there. Expecting the Q1 to be rather bearish. Yeah, I would expect Q1 to be bearish. Inflation and interest rate for the DAX specifically. Obviously, the DAX and the US indices are obviously very linked, but for the DAX specifically, obviously the DAX moves out of sync. The DAX moves more like the Dow. For the DAX specifically, we've got forward guidance now from Lagarde on a bullish euro, which is bearish index. So we should be bearish DAX based on European strength. So yeah, I think Q1 we'll be back down, potentially back down here by spring. Definitely by spring, by Q1. Remember the elevator shaft, yeah? It's not unusual to get 3 ADR hits off the back of a rally like that, which is why I'm kind of tempted to hold this today. Right, so indices are covered. News, obviously, we have now got. Whoops. We've now got three of the news in. We've got the retail this morning, obviously, for the pound. We've had the euro, and we've got the pound rates at 9:30 in 45 minutes. So that's all out in the open now. ADR's lit up like a Christmas tree yesterday. We've got some weekly ranges hit as well. Obviously, the moves that we've had are fundamental, so I wouldn't potentially look at trying to fade these today. You may get fades off of them if we have a look at them individually. Aussie dollar CAD. So Aussie dollar CAD, obviously, where are we from there? We hit yesterday, big strong Canadian dollar. So I wouldn't necessarily try to fade that long. We have got a very big. Actually, no, it's not that. The trouble is, this threw us out on Tuesday. That's really the break, I think. So we could look at fading up into there maybe, but I think that looks bearish. Aussie dollar Swiss massively extended to the downside. Remember, we've got a massive Swiss franc play on at the moment, where the market is positioned really, really, really short on the Swiss franc. So for the Aussie dollar to be coming down means we've got a fairly strong Swiss franc at the moment. So this looks like a pretty good fade to me. We are 188 on a 177 weekly range. So potentially today, there's a nice little long play, at least up into there. I don't think we'll get a 150 ADR here. I mean, anything's possible, but difficult. And again, I say this now, today, cot positioning on the Swiss franc being massively one-sided. This is the figures from last Tuesday, right? We've now got the European rates out. So the figures we're going to receive today on the cot report are Tuesday's figures this week. Tuesday this week, we didn't know what the European forward guidance is, and the Swiss franc will change because it's a massive trading partner with Europe. So that we can't really take into account now, which is why the weighting on it is, this is why you need weighting on multiple elements. Yeah. COT is just one part of the equation. Yeah. Because this data will change on a week. Every Friday we get new COT data, and it's going to change every week. So what's happening with the Swiss franc right now on the COT report is not necessarily what the positioning is today. Today's positioning has changed. Look. Yeah. Look at the Swiss franc pairs. Yeah. So we've got weakness and strength on the Swiss franc there. Okay. So we've got 91% of participants short on the Swiss franc. Does that look like yesterday they might have changed their mind? I think so. So I think we'll find the COT report next Friday, which will include waiting for yesterday's rate announcement. That COT report will have flipped dramatically. The other thing to bear in mind as well with COT, just while we're talking about COT, is when you get to these extremes, think of the COT positioning for those. If you're getting completely lost in this commitment of traders, it's basically the funds on the futures market, whether the market participants, which are speculative, the investors, are long or short on a currency. That's all it is. Think of COT as it goes up to 100%, obviously, long or short. Think of it like an oscillator, like an RSI. Yeah. So you've got an 80-20 level, for example. That is where we are with the Swiss franc at the moment. What happens on oscillators? Yeah. So when you get to a massive point where there are so much selling on one particular currency, you have to think of this. Remember, going back to what we are trading here, we're trading a market, right? And there's got to be 2 market participants for every transaction. So if everybody has sold the Swiss and is short the Swiss, right? Who's left to buy it? Very few people. There's hardly anyone left to buy it. So what are these sellers going to do now when they want to sell more Swiss? They're not going to be able to find any buyers, are they? Because there's nobody left. Everybody's short. So when you get to that point here where everybody's short, there's only one way it can go, back the other way, because these guys have got no one left to sell to. So what do? They give up. And they go, all right, well, let's just take profit. We'll start buying. And all of a sudden, the buyers, this 9% down here, go, woohoo, the move's working in our favor. Let's add some more. Bang, we get a bigger push. And that's where you start the move backwards. So when you look at COT data and something is massively extended to one side, yen, for example, huge one-sided on the yen, that doesn't mean that's going to stay like that. What it means is we're getting to the point potentially where there's not going to be anybody left to buy or sell to. So it will reverse. So there's a sweet spot of around about 60% on the COT report where it becomes much better. So silver, for example, we've got 60% bias one direction. This is good because it means that there's plenty of people to sell to or buy from in one direction. So this could get extended even more and more and more. When you start getting up into the 80s, you're like, right, hang on a minute. Maybe maybe we're going to get a slowdown and a reversal. Yeah. And it's very, very similar in respect to the RSI, the way the RSI works. There's only so much you can buy before you run out of people that are willing to sell to you. And when you run out of people that are willing to sell to you, you cannot move up anymore. Physically can't do it because there's no one left to transact. So therefore, you have to get out of your position and you sell. And then everybody starts to sell. And this is why the RSI is so effective in forecasting turns, because it's just basically telling you that we've had too many people buying it and there's not going to be anybody left for them to transact with. So what do they have to do? They get out of their positions and become the opposite side of the transaction. Buyers become sellers. Sellers become buyers. Buyers become sellers. Sellers become buyers. And that is what this tells you. Who are the big boys? This is the big boys. Yeah. There's 71,000 contracts at the moment in one direction on the euro. I haven't got the headings on this. I can't tell what it is. I think that's longs. Yeah. So, 67% of people are long the euro, right? That's going to get bigger because we're bullish on the euro. So this is only going to go up. But when it gets to 80, 85, I'll be thinking we're going to get a pullback soon, because these guys are going to struggle to push it higher because there's literally no one's interested in going the other way, which is totally the opposite to retail sentiment. Retail sentiment is, completely the opposite. Yeah. So when you've got, this is us. Yeah. When everybody is short the Swiss yen, what do you think the market? Look at this. Everybody yesterday was short the Swiss yen. Everybody, 82% of you and me sitting at home was short the Swiss yen. What happened yesterday? Bang. Why? Because the COP guys need idiots to go the other side of their transactions. Yeah. So when you get retail sentiment going the same way as COP, they can't buy anymore because there's no idiots to sell to. So it comes back down again. It's just basic fundamentals of market movement. This is what we need to know. Yeah. So this is why I'm building this. I'm flipping around a lot today, aren't I? Which I always do, as you know. So we got the extension on the Aussie Swiss. So obviously the Swiss franc is shifting direction at the moment, so I'll be a bit careful with those. Aussie dollar, US dollar. Again, a big drop. Aussie, strength in US, possible continuation there. 4 short, 5 short, 1.5%. So I'm just thinking. Okay, I'm just going to close out partials on that. This is a break-even trade, so the only risk I have is that one position at 0.25%. So the maximum loss I can make is 0.25%. We're due a pullback. I'm just taking profit on that one. This thing's got to breathe. I was just watching it on my other monitor, thinking, do I want to hold it? I think I know where it's going, but at the end of the day, this is real money. So it's always real money, but it's always, this is prop money, which is bigger money. We're not going to get there. This movement yesterday was off the back of news. Obviously, we had in here we had European rate announcements and Lagarde announcing obviously the hawkishness moving forward. So we haven't got that today as a catalyst. So this isn't going to go like that. This is going to go normal. We're going to get pullbacks. So this is 9, 15, 20, whatever you want to use. I would expect some kind of pullback if we are going to continue and take that level out, or test that level 72 today. So I just want to take that off before it disappears. So yeah, other opportunities today. Obviously, CAD Swiss. CAD Swiss. No, sorry, Aussie US rather. Is very extended. Again, I think there's a good chance of a pullback on this. We've got this level here, which I'd probably wait for that to get taken out first, which is last week's low, and then get some kind of bounce on that. If it does that, Euro odd, off to the races. I wouldn't want to be short in the euro. Not after yesterday. Euro New Zealand, same thing. Don't be short the euro. New Zealand Swiss. Again, massive drop, probably due some kind of pullback, but this is the Swiss franc. Yeah, so the euro. The reason the Swiss franc powered up yesterday is because the Swiss franc moves with the euro. Obviously, it's in the eurozone. It's the main banking hub for a lot of places, but mainly euro. So yeah, I would go long Swiss at the moment, which is why I say on the COT report, this is going to shift massively. You know, we are definitely not going to be 90% short on the Swiss next week, or the week after, obviously, because it's delayed. So so that's what you've got on ADRs. There's not a massive amount of opportunities, I don't think, there at the moment. RSIs are all over the place, but again, this is all fundamental moves. So with your Aussie dollar Swiss, obviously, this has come down massively based on the Swiss franc. Yes, it's massively extended. Yes, there is a chance of a pullback, but this is massively bullish Eurozone. So I'd be very wary about taking a fade. Obviously, there's a 50-50 shot. Yes, it could fade very easily. So I was just reading some idiot spammer. Let me just get rid of this idiot. Oops, bye-bye. Unhidden? What do you mean unhidden? Oh, didn't unhide him. God, we get those in the Telegram group all the time, don't we? I'm so glad I came across XYZ They made me millions of pounds. I Googled them. Blah, 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 blah. Idiot. Logging some crappy signal channel. Aussie Swiss, yeah, so massively extended. So just be very careful of trying to fade anything Euro or Swiss at the moment. And that goes for DAX as well. This is a steam train. Do not get in front of the steam train. I'm just going to take ads off on this. I don't want to scale in anymore. I'm done. Yeah, so just don't get in front of this thing at the minute. It's just too fast, too hard. Swiss franc and euro. So we've got Aussie Swiss there. We've got Aussie yen. Came down very fast as well. We're not extended on the 4 hour. We are extended on the hourly, just about. So you're looking at levels here on this one. I really wish I'd had this live. I haven't updated any of the interest rates basically, or any of the figures. This is going to be live fed. At the moment, it's not live fed. So these are all changed obviously, but with regards to the Aussie, a bit difficult on direction at the minute. So I think there's a very high probability of a bounce down here. And what I mean by bounce is potentially something like that. Not necessarily a reversal. So if you look at it long term, obviously the Aussie and the yen, we are grinding down. So really the play on this was up here, I think. But when you look at fundamentals on it though, all the yens, like the Swiss yen is a long, Aussie yen is a long, Euro yen is a long, pound yen is neutral, US yen is a long, New Zealand yen is a long. And it's all long because of the interest rates and inflation problems in Japan. What you can't take into account with any kind of scorecarding system is intervention, which is what we know the Bank of Japan have been doing, intervening. So everything is really along against the yen from a fundamental perspective. But from a real world perspective, the yen are not happy to let that happen. So something has to give, something has to break at some point. Either the Japanese have to come out with a strong monetary policy that actually means the fundamentals shift to the downside and we go short on everything, or they have to get to a point where they can't intervene anymore. And I don't think they're there either yet. So it's very difficult to pick a direction on Aussie yen at the minute. But I'd go with the flow, to be honest, bearish. Which is what my head is telling me you want to be shorting everything against the yen. I think the yen is going to strengthen up and power up, but they've got to do something about interest rates and inflation, which they're not doing at the moment. As soon as they do, this thing's going to get super powerful. Don't forget, this is why we pay attention to forward guidance. You look at the rates at the moment. Interest rates negative. They're the only country that is negative interest rates at the moment. Inflation is fairly low at the moment. So that's all bearish, all bad for the yen. We don't want to buy the yen because we're going to get a negative return on it. We want to buy the CAD because we're going to get a positive return on New Zealand dollar, which we know about. New Zealand dollar's been going through the roof, isn't it? Their GDP is dropping. There's absolutely nothing good apart from unemployment. They've got some of the best unemployment in the world. That's the only thing they've got going for them, which is why they don't need to do any of this at the moment, because unemployment isn't a problem. When unemployment becomes a problem and they have to increase interest rates, they're going to struggle. So they need to start doing this at some point very, very, very soon. And that's why I think the market is thinking now, yeah, we want to be long on the yen, because they're anticipating rate increases. Why? Because the rest of the world's done it and they haven't. Someone's got to be last, and it's going to be the yen. And when the yen does increase those interest rates, it's going to power up and everything's going to come down. So I think, longing the yen at the moment is a little bit dangerous. I'd much rather take extensions to the upside. We haven't got any on Aussie yen, but taking strength, knowing that you've got participants on your side, i.e. the yen, the Japanese, on your side to help push down. So if you took that one on the hourly, you're out. Took that one on the hourly, you're out. You haven't had any others since, but we had a reversal out there. It's all. I'd rather not fade that. Basically, is what I'm saying. Aussie New Zealand, my friend. So we've bounced. Oh, we've bounced. That's good. So just adjust that. So we got limit orders triggering at last week's low, which is a good sign. It still means that I'm unlikely to be flat on this by Christmas, because even if we get a good couple of days now, we're just going back up to there. So looking at this from a longer term perspective, obviously, it's been absolutely flattened. We've been looking for an area to stop at, and there's very little to stop us until we get back down to here. So looking on the daily, where we are here, we bypassed that completely. These areas here, that being the next one, is where, if this level breaks, we've got potentially the floodgates to open to. So difficult, really, to tell where we're going. We really need to hold this level. We are massively extended on the 4 hour and on the daily. Look at the bounce we got back up to just about not extended anymore, and all we did was double top. So when I say about we're going to run out of buyers and sellers at some point, they have found people that want to buy this all the way down to here. You get to the point where at some point it has to physically go back, because there literally will be nobody left to sell to. And it becomes uneconomical for the Australians to keep this happening, because they do a lot of trade with New Zealand, that they will start to issue more bonds, and they will just make, in effect, print money to push it up. So we're getting to that sort of point at the moment. China is the main issue with the Australians. Main export is to China. China's shut. So this is what I mean by the fundamentals. You can look at data. Data is only part of the equation. It doesn't take into account war, weather. It doesn't take into account things like that. New Zealand dollar absolutely collapsed when a volcano kicked off. You can't factor in things like that. COVID, yeah. China's still shut. If your main customer suddenly says, I'm not going to buy from you anymore, what's going to happen? Your business is going to get screwed. So there's still a lot of non data-based fundamentals which are against this, and obviously New Zealand is doing well. So this could be the mother of all buys, with a very, very, very high reward, but difficult. So we're extended again on the hourly there. The Swiss yen sideways at the moment. A good place to start selling if we're anticipating yen strength, but you can see by the reversal alerts on the daily, we're just sideways at the moment. So nothing really going on there, and I wouldn't really want to be selling the Swissy at the moment. Euro odd, don't want to be selling. Euro pound off the, look at that, off the charts. Yeah, euro pound, I don't want to be selling the euro pound. We are starting to pause here now on the DAX. Still not done yet, but certainly looking like it's mind you, still got a minute left on that candle. It's looking like it wants to have a little bit of a rest on it, but propulsion gap there. They're adding to their sales still a lot of sellers there. So euro pound, yeah, don't want to be shorting that. Euro yen, don't want to short that. Euro New Zealand, don't want to short that. Euro yen though has already rolled over, so we got a strong yen this morning. Yeah, there's a very strong yen this morning. Again, this is what I'm talking about. You know, it doesn't matter what the fundamentals say. The market is shifting on the yen. We're seeing it happen. It's just not got the fundamentals to back it up. So think of it like a spluttering car at the moment. We're turning over, we're spluttering. We keep getting these starts, and eventually it's going to start one day soon. It's going to start. When might it start? Next Tuesday. Okay, so we've got the Bank of Japan press conference and their forward guidance. So if that forward guidance is hawkish, that is when we might get that kickstart. So it could all kick off next week, but then we go straight into Christmas. So, you know, big news on low volume equals huge daily candles. So we'll see. The only other thing was we got explained. We got pound Swiss again. Don't want to get in front of that steam train. Swiss franc, euro, both. No reason why they should weaken. Pound yen at the moment, as I say, yen very, very strong. So again, we're getting down to ADRs. We're just about to get an ADR on pound yen. So that'll be the first of the day. There you go. Oh no, yeah, that's weekly on the euro yen. That's, yeah. So euro pound rather, it's just done its weekly range in 2 days. Actually, in 8 hours, 12 hours, something. You know, nuts. So there's an ADR just about to trigger on pound yen. There we go. But I wouldn't want to fade that personally. If you want to, try it. But yeah, I mean, your reversal alert on M5 is not going to happen for a long time. You get the strength of the price action. You don't want to be taking those. You want to be, if it does that, and you get a reversal alert here, then potentially you might get a pullback, but we want to get in the way of this yen strength. And pound US dollar extended on the hourly to the downside. Again, pound, look at the pound. Yeah. That just shows us that the market was unimpressed with, that's the PMIs, I guess, as well, helping that along. Oh, no, it's 9:30, sorry, that's 20 minutes time. So that's basically the market telling us we weren't impressed with that and this. So this yesterday was one of the key negatives that we had on interest rates. I don't know why, but we're the only country that publishes this, which is basically the votes for whether or not we should remain interest rate rises, interest rate drops, or stay the same. So what we've had previous, if you look at the history on this, is we've had constantly everybody saying interest rate rises. So 9 out of 9 interest rate rises, 9 out of 9 interest rate rises. 2 of the board yesterday said, actually, we think we should keep them the same and not increase them or decrease them, but stay the same. Massively dovish. So this is saying that we are getting to potentially where we will flatten interest rates, which is negative currency. So yeah, a little bit bearish on the pound yesterday, and obviously we're seeing the fallout of that this morning on the pound pairs. Max, is your fundamental FX data sheet with live data, or do you have to put it in manually? It will be live. I'm building it. I've built it manually at the moment, but this will all be fed. This will all be live fed on a daily basis. But it's manual at the moment. It takes no time at all. You know, interest rates are all available on Trading Economics, and there's lots of places you can get all this data and put it together. But I will automate the whole thing, and I'll probably build a website for it and stick it up, and put some nice charts and things up. But it's mainly for me. But you can build your own fairly easily. Well, I say fairly easy. It's taken me about a day to build that. I've been working on it for 2 days. I just wanted to get as I say, the key thing is working out your scorecarding. Everybody's scorecards slightly differently. There's another guy that does his own scorecarding. I can't remember his name. But he does lots of fundamental analysis. He spends all day on Saturday or Sunday putting together a massive report on fundamentals. Some of it is way over the top, and I don't really think I need to know about it. But some of it is along the same lines of what I'm doing there. So yeah, Trading Economics is a really good site for getting data. So it'll give you quarterly forecasts on inflation, all that sort of stuff. And they've got an API, so basically I will pay for the API, basically. And that data will all be fed in automatically, so I don't have to do it. But I mean, it's not a massive, if you look at a calendar, yeah, it's not a massive faff, is it? Right? Yesterday, I'd have had to, like, let's do it. Let's do it. Aussie unemployment 3.4. So, you know, it's not a massive faff, is it, every day to go to there and go to the Aussie unemployment and change it. I've done it. We've done it. But you know, all you do is you go, oh no, it's 3.6. Yeah, and it will change your scorecarding automatically and for you. So it's not actually a lot of work to manually do it. It's all the red. If you just go to red on here, and orange for GDP, because some GDP figures are classed as orange. You know, you can take all the other crap out and say, I'm only interested in central bank, unemployment, inflation, and growth, yeah, for all those countries. And it will just give you the stuff you want a scorecard. But you kind of need to know what to do with it, which is that's the difficulty bit, isn't it? Lots of different ways to allocate weight to different things and stuff. So, but sentiment, is also very important. COT sentiment is very important, and retail sentiment is also very important. You know, if you've got COT sentiment in one direction and retail sentiment in the other, you can be pretty damn sure it's going to go the way of COT, because retail can't move the market, COT can. And again, coming back to my, what do we need to do? Yeah, I'm a massive investment bank with $20 million worth of transactions to perform today. I need to execute $20 million worth of longs. Who do I need? $20 million worth of sellers. So once I've exhausted all the institutional people, who am I going to go and get my orders from? Retail. And you can guarantee, and it's the same, I don't know why we have this crowd mentality thing, but we do, because we're human beings. But us as traders always want to do the opposite of what the market's doing, yeah? So DAX is coming down like a steam train. There will be people buying the crap out of this at the moment because it can only go so far. The reason behind it is, I think, and I think a lot of traders think this way, is we like a bargain, don't we? So we see something that got expensive from here, and we think, well, last time it was there, everybody bought it, so it must be cheap. The market doesn't work in cheap and expensive like a normal market would. You know, apples and pears all have an intrinsic tangible product with an intrinsic value attached to them. This is an exchange rate. It's got nothing to do. This is why, you know, I don't agree with the terminology used on overbought and oversold. This is not overbought. There's nothing to buy. It's an exchange rate. If this was gold or a stock, yes, but it's not. In FX, this is an extended condition. It's not oversold or overbought. But you know, people get down and think, "Oh, DAX is cheap at the moment." No, it's not. It's a stock index. It's not cheap. It's coming down like a steam train. Why do you want to buy it? Everybody, and I know the reason. It's the same reason I buy stuff when the RSI is extended, because mean reversion has a high strike rate. And what does everybody want to be? Right. Being right doesn't make you money. Catching that makes you money. Being right is irrelevant. The market will go where the market will go. If you're on board, you'll make money. If you're not on board, you won't. Trying to be right with a 0.5 to 1 risk-reward ratio is really good for the soul, but it's not good for the bank balance. And that's why we have sentiment working completely the opposite way. So look at COT. Let's look at one, for example. So Euro, they're long Euro. And let's look at a COT. Right, so Swiss franc, this might be in sync, but 91% short, 9% long on the Swiss franc. Look at the sentiment on the Swiss pairs. They're all long. This is the short column. They're all long. You know, it's just not so much there. There, I mean, we just do the opposite, don't we? We just do the total opposite of what the market is doing, because that's a bargain. It's not a bargain. It's going down like a rock for a reason, because the euro's pumping hard. It's you know, it's just it's just, you know, we all have a bargain, don't we? Go on Amazon on Black Friday. Oh, let's buy everything up, and then you realise you've saved £22 on a £290 order. You know, it's just the way we work as humans, isn't it? Also suspicious. Don't trust the market. You can never trust the market, no. Market does what the market does. There's nothing you can do about it. And you know, that's why I use the steam train analogy. Yeah, don't stand in front of a steam train. Get on it. But understand how the steam train functions. Market structure. Yeah, you know, at some point that steam train is going to stop at a station. Think of a pullback like a station stop. You know, get on and get off. You don't know when it's going to turn, yeah? So, you know, this train has got a terminus, and it ends up going back the other way. When? It's extended. When there's nobody left, right? So, again, looking at the buying and the selling analogy, right? Everybody's getting on the train, right? And they're getting off, yeah? If you're buying here, you're getting off here. There's a load of people got off there. Load of people got on, load of people got off there. Load of people got on, everybody got off there. So the train driver's like, well, there's no point in me going any further because there's no one on the train. What's the point in going up there? So we might as well turn around and go back the other way. We'll pick up passengers along the way. Yeah, it's the same thing. It's buying. You just run out of one thing. The other thing has to happen. Just, you know, it's a binary condition. If I want to buy right now, there has to be somebody on the opposite side of my trade selling. Otherwise, we cannot transact. If I have an apple to sell, I have to have somebody here wants to buy and eat an apple. If there isn't any of those, I'm not going to buy. I'm not going to sell my apples, am I? It's just market functionality. How will you do your sheet with live data? Yeah, the trading economics API costs $500 a month. Yeah. Web scraping from I don't know. I just buy APIs. $500 a month is nothing to get that sort of data. But again, you know, if you don't worry about what I'm doing. If you want to do your own one, copy and just go and get it. It's all free. Everything's free. It's all. You're saying, how will I get live data from trading economics? I'll go on to trading economics every morning and I'll spend 3.5 minutes looking at the data. Has it changed? No. Has it changed? Yes. Tap, 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 tap. You don't need an API. You can literally spend. This is a job, right? Every job has a bit that you don't like in it, right? The bit that I don't like in the job is data, right? If I earn enough money to pay someone else, a computer, to do my job for me that I don't want to do, I'll do it. If I don't have enough money to pay for someone to do it, I'll do it myself. Doesn't matter, does it? Go get it yourself. It's all published constantly. Yeah. This morning, we're going to find out the results of the PMI figures for the pound. Now, you can either get the API to feed this data in every 30 minutes from a website, or you can just watch this, hit that button, and then in 6 minutes, note the number down in your spreadsheet. Up to you. But, you know, if I can pay money to have it automated, $500 a month, right? I've made 16. You watched me live make $1,600 this morning, and I'm still in this trade with a $200 profit running open. Do you think I care about 500 quid? It's irrelevant, isn't it? And you'll find it cheaper than that. If you look at trading economics, I don't know what their costs are. If they're 500 a month, they're 500 a month. I don't know. But there'll be people out there with the same data cheaper. You can always get it cheaper somewhere else. And like you say, there's web scraping technology. As long as you're not using it for commercial purposes, get a web scraper, build a web scraper. I've built web scrapers. You build a web scraper in an hour. I've got web scrapers built. I've got one here. I've got data miner for this website, Forex client sentiment. Yeah, my FX book sentiment. Why is it not? I don't know. I need to go into the software, but you can build data miners very, very quickly and easily to go and grab data and stick it in a spreadsheet, and then you just copy that spreadsheet into another spreadsheet, and you're done. It takes literally 10 seconds to get all this information together. And that's all the analysts are doing. You look at Anton Kreil's course, which I've mentioned a few times. They provide you with spreadsheets when you do their course, but they're so complicated, but literally, you can pay them for all of this data. They have a service where they will provide you with their spreadsheets that they use in-house. But the data part is not the problem. What do you do with the data? What do you do with this? Right? Aussie US is a -7. What are you going to do with that information? How are you going to use it? Are you going to use a position trade? Right? It's a short. When are you going to get short on this? You're going to take a break of that level. On that level, you're going to add one and play it down to here. Are you going to wait for a pullback into that propulsion gap and short it at ADR? Are you going to wait for the next push up and reversal alert on M15? How are you going to use that data? That's the thing. All this is a number that says likelihood is market conditions at some point in the future are going to go short. That's just tiny part of the puzzle, isn't it? Are you going to position trade this? Are you going to go short now, and then if it pushes up, take another short there, and then if it pushes up, take another short at 125 ADR, and wait for it to break that low before you get out? So many options. You're trying to shoot on your own. You've been trying a sheet on your own for a while. Yeah, I mean, do it manually. Don't be lazy. not saying you're lazy, but don't, you know, this is a job like anything else. And if I have to, if the first thing I have to do every morning is go to here and think, right, what have I got to update on my spreadsheet today? I mean, I'm not using PMI. PMI is another data point. Again, Anton Creel and his guys use PMI. They use M2 money supply. They use, there's a lot of other economics that are used. So, but you know, worst case scenario, if I'm using PMIs, I've just got to do that, copy, run over here, go to my PMI tab, paste it, and it'll adjust all this. Part of your job. It's the nasty bit. It's the admin. Actually, you know what I could do? I could pay my wife. There'd be tax benefits in that as well. So I could, I could, maybe I could pay her 10 grand a year to do it, couldn't I? That'll write off 10 grand's worth of tax. Or pay, you know, go to freelancer.com and employ a person from a country, wherever, to do this for you and pay them $50 a month to go and enter this data in for you on every day. They have to spend five minutes a day doing it rather than pay for an API. If you're using it for your personal use, it doesn't matter how you get it. If you're using it for commercial use, obviously there's probably laws about doing stuff. I'm not looking into it because I'm not doing that. Hola Froster, hello, welcome back. Pound yen short. I'm short everything yen, everything against yen at the moment. We're at ADR today on that, the first ADR hit. So there is a potential fade opportunity on it. I'm just going to break even average this. I'm going to get out with that last little bit. Or it'll drop. I mean, it'll either get me out. It's going to get me out. And there we go. We'll be out in a sec. Or maybe not. Make your mind up. There we go. Out. Yeah, so there's obviously a fade opportunity on this. The pound, they weren't impressed yesterday with, obviously, as we've had a big drop this morning. So potentially there's a fade up there, but I'd rather be shorting this than longing it. Just with what's going on with the yen at the minute. You know, massive long, massive support level. But this is the first run up at it. You know, that's probably what we'll get. Wouldn't want to be long it at the minute personally, but you never know. But yeah. So yeah, that's it for RSIs today. Obviously the outlook moving forward, I'm going to start position trading again in January. I've still got my New Zealand CAD and Aussie New Zealands to manage at the moment, but I'm going to, I think, start running one of my prop accounts with a stop loss strategy based on fundamentals only as well next year. So I'm going to be, I think, doing a lot more variety of trades, all based on the market reverse alerts indicator still, obviously, because I don't want to take any trades until we've got a confirmation that it's actually going in my direction. But you know, things with the fundamentals, I'll be using fundamentals to find bias, and then I'll be looking for areas like on this pound yen. If we have short bias on this, I'll be looking for areas to take trades from. So propulsion gap bounces, double tops, things like that. But I'll be using stops. I won't be using TPs. I'll just be using stops, and then we'll get into some positions. So I'm going to kind of change to a hybrid strategy next year, because I have to be honest, most of my money is now coming from prop, has been for the last 3 months. So more than that, actually. So I kind of want to play more on using other people's money, because it's more cost effective to do it that way. So, Professor, you're short on oil, are you? I'd be careful with that. I get why you're shorting it. I say don't be careful with it. You can make money easily. I'd be careful when you get down here. If we get ADR today, I don't know what your time frames are, but if you've been shorting it for 2 days, I guess you're shorting it on an RSI extension on the hourly, yeah. I'd be a bit careful. I get the feeling we're starting a move back to the upside now on this. But I've heard news this morning that Russia's going to be upscaling its ground offensive in January, and they're shelling Kiev pretty hard at the moment. So the more that thing drags on, the more pressure there's going to be on oil pricing. So we've got very little that we can do about oil pricing while one of the main producers and suppliers to Europe is not being particularly helpful. So I think until we get some kind of alternate energy solution, which is all coming in next year, all the building blocks are there. By the end of next year, Russia will have very few customers for oil. Obviously, Saudis produce most of it, but a lot of it comes through Russia. So there's got to be alternative routings put in place and all sorts of things. But the market participants are all long oil at the moment. So if you're trading it short term, it doesn't matter, does it? Long-term fundamental bias has nothing to do with the 5-minute chart. Oil is so weird; it's opposite to what's happening fundamentally. Yeah, exactly. We had negative news on Wednesday for oil, and it just went, oh, brilliant, negative news. So just fundamentals are totally out of the equation at the moment. It's an absolute mess. But that oil news that we had, it was 10 million more barrels than we anticipated, which is massively negative. There's more stock, so therefore prices reduce, and it didn't. It's just. But I don't know. As I say, I only started trading oil properly three months or so ago, but I quite enjoy it as an instrument. When it's one of those. It's like I say, it's like gold. If you get on the right side of it, it's a massive money maker. If you get on the wrong side of it, it's an absolute pain in the arse. So I think from a stop loss strategy perspective, I think it's a great instrument to trade, but I wouldn't want to position trade it. Remember the OPEC meeting and oil just dropped. Yeah. Well, it should have just rose. Yeah, it's just, again, fundamental bias on commodities and oil is very difficult to gauge. There's a lot of different fundamentals that go into it, and so it's much easier to look at FX, because FX is driven by 2 instruments. This is only driven by one. It's priced in US dollar, obviously, so the US dollar pricing will affect oil pricing to a certain extent, but all of that is hedged. So with oil, what you need to understand about all commodities is they're all hedged. This is primarily what the futures market is used for, is for hedging commodities. So, which is why in the COT report we have all of that stuff. Yeah. So crude. This is the hedges on crude. These are the hedges on. Actually, these aren't. This is non-commercial. So this data in here is the non-commercial data. The commercial data is the hedging. part of this will be hedged as well. But so this is all the prices on wheat, oil, copper, coffee, everything basically. Soybeans, solar energy credit. There's lots of credit tariffs running, oats, corn. So basically, all these are used by the hedge funds. So somebody that produces wheat will forecast their crop returns in whenever wheat's harvested. I don't know, May. I don't know, I'm making it up. I have no idea. I don't do farming. So if they harvest crops in May, for example, and they expect to make 2 million out of their harvest, if the wheat price at a specific time is X and they're going to sell it at Y, a hedge will be taken for them in case the wheat prices are not as expected, so that they have to sell it for another price, Z. The hedge will make up the difference. And that's basically what hedging is. It's taking a contrarian view to your expected return on investment. And the hedges are typically executed over a 3-month period, which is why we use a 72 daily moving average, which is 3 months. It's all clever, It's all cleverly put together. There is logic behind my maths. I prefer the 1 hour structure on oil. Yep, you need to pick your time frame. This is why time frame is so important. Yeah, don't flick between them. Just stick with one. I stick with H4. If you want to stick with H1, stick with H1. Very little difference between the two, to be honest. When you said oil is a money maker, when you're in the right direction, been trading it for 3 weeks. Every short I'm taking is TP. Yeah, and that's the thing, isn't it? Every short you're taking is TP until every short you take is not a TP, and that's when you get out. And that's why those moving averages work so well. Yeah. So longing oil, longing oil, longing oil, longing oil, longing oil, longing oil, stopped out, shorting oil, shorting oil, shorting oil, shorting oil, shorting oil, shorting oil, stopped out, longing oil. That's what you do. That's what my mentor taught me, that introduced me to these. Like, you buy it when it's green, and at some point you keep buying it and you'll be stopped out a couple of times and it will turn red. That's when you start selling it. And you keep selling it until it turns green, and then you stop selling it. Really simple trading, isn't it? I wish. Don't know why I didn't trade it for a while. Yeah, it's just one of those things. There's so many things you can trade. Yeah, you got to pick something. Some people trade stocks, some people trade indices, some people trade FX, some only trade oil, some only trade gold, some trade the 10-year bond, 10-year note. There's a million instruments. Some people trade crypto. Trade what you like. Either become an expert in one thing that you can milk on a daily basis, like the DAX. Propulsion gaps held another short opportunity there if you want to take it. Becoming expert in one or two things is great, but it also limits you. So when this goes to a horrible range bound and your trend strategy fails, if you haven't got a mean reversion strategy, you're not going to make money on it. So you're going to need to find something else that's trending. Equally, if you're a mean reversion trader and something stops mean reverting and goes into a huge trend, you need to find another instrument to trade, or you need to have a trend strategy to back it up. Yeah. Mean reversion, breakout, and trend trading are the only 3 types of trading you can do. You need to have something in all of them. NDTV share increase or NOI? No idea what that means, sorry. NDTV share increase or NOI? Nope, you're speaking another language. A year's prediction. Good luck with that. A year's prediction, what's that mean? I wouldn't trade a year's prediction. What do you mean a year's prediction? Poster. All right, you're talking to Poster. Oh, sorry. Yeah, Professor just said, what do you think oil price will be at the end of 2023? Oh, I haven't got a clue. No idea. No idea. How many nuclear weapons are going to be launched? Are we still going to need oil? Are we all going to be living in The Walking Dead and running around with baseball bats wrapped in barbed wire? I have no idea. I don't know. I couldn't tell you where we're going to be then. Uh, oh, hang on. Is that crude oil? Yeah, barrel. Mm, I mean, look at it. I mean, that's where we were last January, last December. So I reckon 2023 will be somewhere around there or there. I don't know. I don't know. I can't. I just don't think that long term. I'm not interested. Hey, you can see where I've been where I've been shopping for my wife. Look. Oh God, advertising. They follow you everywhere. Yeah, I don't know. Sorry, whether NDTV share increase or not. What's NDTV? I don't trade. So I think you're in the wrong group. I don't trade shares. I have no idea. I don't know about shares. I'm not a share trader. $120 Prosper's forecasting. There we go. You heard it here first. 2023, we will be at 120. Well, that's quite a long way, isn't it? I'd love to leave this line on my chart for a year. Shopping? Did you say shopping for a wife? No, what I've been shopping for my wife, not with shopping for a wife. You know, it's so dangerous. You go and do some Christmas shopping on a website, right? And then you're sitting there looking at something on the computer with your wife, and all the adverts for everywhere you've been crop up, obviously, don't they? The retargeting ads. So I'm sitting here, and she can see all of our Christmas presents flying past in adverts. It's like ruined Christmas, Google. But yeah, there you go. So that's the Ukraine war spike. And obviously it double topped. So if we are going to have a bull run for the year, we will get up there. But I mean, the major market participants are forecasting sort of somewhere between 90 to 100 a barrel. But they're forecasting that quarter one. So if we get there quarter one and then we have another rally quarter two, yeah, I mean, if it's going to be a bull year, but don't forget, oil demand for oil is dropping. We're moving over to electric cars, renewables. The demand for oil is dropping. So there are countries that use a lot of it, obviously, but why do you think the Saudis are building so many attractions and becoming the new New York, new Las Vegas? Because they know damn well at some point we ain't going to buy oil anymore and they're going to go bankrupt. They need another source of income. So they're building all these beautiful islands with holiday resorts and stuff. Oil is going to stop being used at some point in the future. We are accelerating hard into electric cars. I've got an electric car. Everyone in my family's got an electric car. Full electric, not hybrid. And in the next few years, you won't be able to buy anything but electric cars. So we're going to completely stop using petrol. That's one of the biggest uses for oil. We're not buying oil anymore. Oil price is not going to go up. Yeah. Supplies will increase and get stockpiled. Demand will drop. So if you want to get rid of your massive stockpiles, you're going to have to sell them cheap, aren't you? Otherwise, I'm not going to bother buying it. I don't know. I don't know. The future for oil, I don't think is good. How quickly that's going to happen, I have no idea. But I'm not worried about what's going to happen in the next year. Right now, if I'm taking a trade on oil, I'm interested in what's happening in the next week, the very, very, very most. Have you tried to put together one strategy that uses a context factor and works under all conditions? No, there is no such thing. I have, yes. The answer is yes, no, no, there isn't. You can use there's indicators out there, and there's metrics out there that you can use for market condition. So there's a thing called bull quiet, bear quiet, and things like that, where you have it can detect the conditions of the market. The problem with any system or strategy is it's always built on an indicator. An indicator will always lag. So if I have an indicator that tells me that we are in a strong bull market now, yeah, what's that got to do with next week? Nothing. If we're in a strong bull market now and the bear market starts next week, my system and strategy that says I should be going long is going to fail. If all of a sudden we go into a bear market for a week and my system and strategy says we need to be taking trends short, we're going to a bull market the next week. I fail. By the time my indicator has realized that we're actually in a bear market, bull market, bear market, bull market, we're in a range, my strategy switches over to mean reversion, just as the range breaks and we move into a trend. My strategy fails. Yeah. This is why people hunt the Holy Grail. They're looking for the indicator, the strategy that just gives them a 70% strike rate, 60% strike rate, 50% strike rate, and works all the time. Doesn't exist. Because fundamentals shift constantly. So you won't find one. The opening range breakout EA that I've just launched onto the marketplace works fantastically in certain conditions. It'll have bad losing runs for weeks on end. Because the opening range, today is a beautiful one. Pop, bang, lovely. Had one of those yesterday as well. Pop, bang, lovely. 2 days in a row, 10% return. Lovely. 3 days, the next 3 days is going to do that. It's going to stop me out there. It's going to stop me out there. It's going to come into the range and it's going to fly and I'm going to go, oh, I missed it. So I'll change the parameters on it to be longer so that I'll catch that one next time. What happens next time is it does that, and then that. And I go, oh, damn, I need to go longer. And the amount of time you just continuously change it. And this is why I did all the back tests. I've got 40,000 odd variations of a strategy and they all work, but they're never, ever, ever going to be a period of time where they will work constantly. So the best thing you can do is have 3 strategies for each market condition. So you will have a mean reversion strategy, which will perform brilliantly in range bound or in organized trends. Mean reversion will work. You can have a breakout strategy, which will fail a lot of the time, but when we get those breakouts, it will make a lovely amount of money. And you have a trend strategy, which will make money in trends, but that's when the mean reversion strategy won't be working. So as that's making a loss, this is making a profit. You don't know. I have no idea whether this is going to be a trend day, and we're going to do that. Yeah. So look at where we are here now. What is going to happen from now? I don't know, obviously, is the answer. Neither do you. But what is going to happen from now is that, or possibly that. I haven't got a Scooby-Doo clue. It's London rhyming slang. Sorry, not from UK. Doesn't mean anything. I haven't got a Scooby. What was he talking about Scooby-Doo? I don't know. But you need a strategy. Me personally, I am now thinking we're probably going to get a pullback. So I'm playing a mean reversion now. I'm thinking mean reversion now. If I'm wrong and this breaks out to the downside, I'm going to think breakout. and I'm going to think trend. Yeah. So you will never have any strategy that will work all the time, no matter what you use. So you put a strategy on an instrument and you let it work when it works. And you make sure that when it's not working, you mitigate risk as much as you can. So you have trailing stops and short stops to get you out when the trades don't work. But when they do work, you let them run. Because when you get a move like this, yeah, like I did this morning, I didn't take profit on it. Let it go. I have no idea when this is going to stop. It could go like that. It could have gone like that. So why take profit with a 3-to-1 risk reward when you can make a 15-to-1? Add to the position and maximize on the position. But that's, you know, when you're trying to put strategies together, there is nothing I found that you can work with any indicator, because even if it's a fundamental indicator, right? Think fundamentals. Everything changed yesterday. So up until yesterday, fundamentally, we had a directional bias on the pound, the euro, and the Swiss franc. Yesterday, that fundamental bias changed. So if whatever I'm using, if it's fundamentals, yesterday I need to change my fundamentals. Yeah. If Ukraine accidentally fire a rocket into Russia and it hits Russia and kills a load of people, Russia are going to fire a much bigger rocket back at Ukraine. And if that accidentally misses Ukraine and hits Poland, we're going to go into World War III. Do you think this fundamental that happened yesterday has got anything to do with what's going to happen when that rocket's launched? No. Well, how would you expect a strategy to work? Can't. You just have to trade everything in the market. And when you realize you've got no control over what happens on a daily basis, you just make sure that when those moves happen, you're on them. You don't know when they're going to happen or if they're going to happen. But if you're not on it when it happens, you're not going to make money in trading. You're going to get losing runs over and over and over again. I'm running a simulation at the moment. How are we? What, 194 out of 500. Yeah. Look at all these versions. They all work. Every single one of these runs of this strategy is working. It's making money. Yeah. The degree to which it makes money varies from $300 odd to $14,000. Yeah. I have no control over whether next year I'm going to achieve that result or the result at the bottom, because I have no control over what the market is going to do next year. But what I can find out is the strategy works X% of years in profit, but some years it won't make a profit. I can't control whether it does that next year, because that is based on these settings. The settings down the bottom are different. So if I choose those settings next year, this might turn into 45,000 for all I know. I haven't got a clue, because I don't know what market conditions are going to be. So indicators mean nothing. Fundamentals mean nothing. Backtests mean nothing moving forward. You can backtest for robustness, and that's what I'm doing here with what I do with all my products. I backtest for robustness. I make sure that regardless of what type of settings I use, there's a high probability that I will not lose money. I don't know when I'm going to make it, because it's not down to me. If Lagarde had come out yesterday and said, whatever, no, it's the wrong rate, sorry. Lagarde had come out yesterday and said 2.25%, the result of this trade would have been that. I would have made money either way, personally. But if the market, when she came out with that rate, had decided that's what they were expecting, what we would have got is that. So my trend strategy would have failed, but my mean reversion strategy would have worked beautifully. You just cannot tell. So there is no way of manufacturing a strategy that will work under all market conditions. You need multiple strategies. You could build an EA that says, if we have been ranging for X number of candles, switch to mean reversion mode. But again, it's going to fail when the breakout happens. You could have it set so that if we've been in a range for X number of candles, switch to breakout mode. But we know that most breakouts are false breakouts. You know, you make your money when the market is volatile. You don't know when that volatility is going to come. We've got a good idea. It's usually around news, isn't it? And it's around the market open, which is why the opening range breakout strategy works, because we know we can time volatility to the minute. 8 a.m. every day in the UK on the DAX index, it goes nuts. I'm trading then because that's when it's going to make money. On the pound US dollar, I haven't got a clue when the volatility is coming, but I do know it happens around news. But which way it's going to go is not predictable, is it? So you have to have a strategy that works in all market conditions, or multiple strategies that work in different market conditions. Right? So the best thing to do is have a really good, solid trend strategy. So if you want a trend strategy, here's one. Yeah, use a 24 and a 72 moving average on the daily chart. When it's below the 72, sell, and when it's above the 72, buy. There's a trend strategy. How many moving parts have you got in it? One, a 72 moving average. In its simplest form. You could make it more complex with a 24. But when we go into a range, when we go into a range like this, you will get destroyed. But what will your RSI mean reversion strategy be doing? Oh, look at that. Making an absolute fortune. Making a fortune. Every time we get extended, we're making a fortune. So my trend strategy loses, my mean reversion works. When we're in a range, when we've got flat moving averages, I would employ a breakout strategy, waiting for the next trend to start. I don't know which way it's going to go, and I'm going to get stopped out. I'm going to get stopped out. I'm going to get stopped out. I'm going to get stopped out until I'm not stopped out. And I'm going to make a fortune. So have 3 strategies, 3 EAs running on every instrument. You will always make money, but you've no idea which one. And how much you make will depend on how horrible the market is. Look at US dollar Swiss. What's that? What the hell is that? What works there? It's just a nightmare mess, isn't it? But yeah, that's my thoughts on it anyway. Proster, haha. I don't know what you're laughing at. It was ages ago. We'll be living on Mars with urine as a precious commodity. That is true. But that's good because you don't need to sell it, do you, or buy it, because you produce it every day. So there is no value. There's no intrinsic value in urine. Not that I'm aware of at the moment. Unless you can't pee, then yeah, you're going to need to buy someone else's. Because of the OPEC meeting, the reduction of oil is month by month. So I'm thinking it will rise month by month. Yeah, well, that's the logic, isn't it, Proster? But whether that actually happens, who knows? NASDAQ down 6% in the last 36 hours. Looks like we may test the year's lows. Could do. Again, you know, the forecasts. Forecasts are great. Where could we be going? Down there. But what that does psychologically is gives you a bias. If you have a bias short because of what's happened in the last 2 days, when you drop down to the M5 chart and you get a reverse alert long, you won't take it because your bias is short, which is fine. But you just miss that trade, that beautiful trade back up into that resistance where it's going to this morning. I don't know, maybe it is, maybe it's not. But bias on low time frames like M5 is dangerous because the M5 time frame is chop. It's got absolutely nothing to do with higher time frame directional bias. You're scalping. Your scalping moves. Stop, entry, profit. Yeah. What do I care where it's going, whether it's going to test the yearly lows or whether the moving average on the daily chart is telling me we're in a downtrend? Doesn't matter, does it? You'd have missed that. Beautiful. You know, you'd have missed that. You'd have missed that. You'd have missed. You know, you miss a lot. Price action trading, scalping, short term, M5 timeframes, M1 timeframe, anything small is just not really. And that's, you know, this new EA that I launched was designed to test and prove to somebody that moving averages don't make any difference. And it does, because that opening range breakout EA trades the opening range breakout. I don't care what the bias is. It's nothing to do with it. It would, just because there's a bias short one day, because you're, whatever you've caused your bias with, has nothing to do with whether or not that breaks out and goes mental in the morning. It can do that and smash down and prove your bias right in the afternoon. But if in the morning it does that, I'm going that way, because that's where it's going. I'm not the one making it go that way. The market makers and the participants are making it go that way. So I'm getting on board their train until they get to the station where they don't want to go that way anymore, and then I'll get on the other way. What I think is going to happen has got nothing to do with where it's going, is it? So yeah, I agree with you, but that doesn't mean I won't be longing the NASDAQ. We'll be dead by that time. Yeah. Yes. When we use 0%, of using oil, yeah, I think we probably will be there by the time we actually stop using oil. But who knows? You know, don't forget, the dinosaurs were happily munching grass until the meteor hit them, and then they weren't munching grass anymore, were they? That could happen next week, next year. You could be dead. You need to live in the now. I don't worry about what's going on in the future. What time frames do you usually trade within? I trade all time frames, really. My main time frame is H4, because it gives me an overview. It depends what strategy I'm using. If I'm position trading, I use 4-hour charts for position trading, and I enter on exhaustion. So I'm a mean reversion position trader, which is what the Boocamp is all about. But I'm also a scalper. I hate that word. I hate scalping, but it makes money. So I scalp as well. So I trade on M5. I don't do any other time frames really. M15, I use H4 and M15 for mean reversion, or H1 and M5, which I have been using more recently, just because we've had a quiet market with lower volatility in FX. So I've been using smaller timeframes because I wasn't getting extensions on RSI on hourly charts, but now we are getting more volatile, obviously. And into December, I'll switch back to H4 for position trading. But M5 is scalping timeframe, personally. I agree with you. You need to avoid holding bias. Keep eyes wide open. Yeah. Bias is always good. Bias it's good to have a bias, but you know how your bias is formed is as important. Yeah, forming an incorrect bias. Aussie New Zealand, right? Prime example. Forming an incorrect bias and being stubborn and following your bias will get you into pain. That's just what happens. So, you know, your bias has to change. After a point in time, your bias will flick the other way. But the problem with having a bias is, my bias was long on this for ages. I got down to here, I bought it, and then it pushed down to here. By the time you realize your bias is wrong, it's quite often too late. So, and the other problem with it is, if you shift your bias straight away, quite often the bias will shift back the other way. Yeah. So a bias based on any indicator is always going to be less reliable than a bias based on future prediction. Future prediction is done through fundamental analysis. But that's why I used to follow the COT report, because the COT report tells you what the future bias is. Because the guys that have entered 230,000 contracts in one direction on the pound are the guys that have the power to move the market. So I want to be in line with what these guys are doing, because they are obviously pretty sure that the pound is actually going down. 66% of the speculators in the market worldwide right now are thinking the pound is a short. I want to be on board with them, but only if everything agrees. And this is long term, don't forget. So long term bias. And this is what these moving averages represent. They represent the monthly and quarterly movements. So as long as COT remains short Aussie and long New Zealand, their positioning, and as long as this is sitting below the monthly and the quarterly average movements for this instrument, there's no reason to change your bias. But if it starts to do that, yeah, there's a good argument for going long, isn't there? Because at some point they are going to change their bias as well. We just don't know when that's going to be. Not easy trading. If it was easy, everybody would be doing it and making millions of money, wouldn't it? Millions of money. Ming, I just realized even if the ORB DAX 1 set took the sell, it would have been stopped out. Retraced by 1128 points. DAX is set to 1,000 point stop loss. Yeah. Yeah, exactly. No, you're totally right. So if you weren't using the ORB1 set file, wrong one. So if you weren't using ORB1 on the DAX and you were using ORB, I don't know, let's use that one. If you were using that one, you'd still be in it, wouldn't you? But this is, I mean, this is why the testing's been done, yeah, on the EA. It doesn't matter. Some days you're going to have the wrong stop, and this is why trading works and trading fails. And this is why the psychology part of it kills everybody, right? Because, like you just said there, and then quite rightly so, it would have been painful seeing it retraced by 1,100 points, getting stopped out, and then going downtown 10,000 points. That's right. So, but look at the long-term return. I think that is it. I think that's the one. Fixed stop of 100. Yeah. I don't know. No, that's the moving average one. But yeah, I mean, all of these, like that one works on moving averages. That one works and only takes the initial opening range break. That one works on a percentage banking. That one only takes 2 of them. That one takes 2 of them with a massively tight stop. That would have definitely been stopped out. But that one have a strike rate of 50%, whereas this one will have a strike rate of 18%. Every single one of them, though, look at it. There's 1,200 runs of the strategy. 1,166 of them work. Some days it's going to work, some days it's not. Some days you would have wished you'd have had a stop loss of 750 instead of 250. But other days you'll be wishing you've had a stop of 250 instead of 750, because the day that this goes like that and stops you out at 750, you'll be thinking, God, if I only had a 250 stop, I wouldn't have lost that much. There is no right or wrong. There is no set file. And this is why I go back to what somebody asked at the beginning. Have you got a Forex tracker running on this? I can set one up, but which of these do you want me to run it on? And which run of it do you want me to run it on? There's 100 different variations there. There's 1,200 variations there. There's 100 there. I don't know. This is one that's got 1,300 variations. There's 1,300 variations there. There's 260 variations. There's 500 variations there. There's 4,800 variations there. I don't know what the maths is. Add it all up if you want to, but that's how many versions of this EA work. But whether or not you make a profit on this day will depend on whether the stop loss was 500 points. If you were running a 500 or more trailing stop, you would have got out here. If you were running a 500 or less trailing stop, you'd have got out there. So which of those profits would you have taken? The profit or the profit? See what I mean? I've just got out this morning on this trade here. Yeah, if I'd have been running a tighter trailing stop on it instead of the moving average, I would have had a different result. But it doesn't matter, does it? I'm not looking for every single day to return money. I'm looking for $101,000 return over a year, $45,000, $23,000. I'm looking for 21 grand, 65 grand. I'm looking for 73 or 138. I don't know. I'm just looking for a positive amount of money in my bank to pay my mortgage. Which of these I use is irrelevant. They all make money. But some of them are going to be painful. Like you say this morning, if you were watching this and you had a tight stop on it, you know, you might, yeah, you could have got stopped out. I don't know. But it's irrelevant, isn't it? You need to pick one and run with it. Or the other thing you can do is have the EA get you into the trades and don't have a trailing stop, don't have a break even or anything, and just manually manage it. I pressed the button, personally, I pressed the button there this morning, didn't I? To get out. That's where I was happy. I made 1.6% profit this morning. I'm happy with that. Believe it or not, that's just paper mortgage this morning. It hasn't, because I've only got an 80% split on it, but almost. Yeah. So you could have the EA and use it partially automate. So let it do the legwork, let it get you in, and then watch price action yourself and think, right, well, the way this is going this morning, I don't want a tight stop on this. I want a wider stop on it. I want to use a moving average because this thing looks like a steam train, and I don't want to get taken out on a large wick that ends up like a shooting star. So manually manage it. Up to you. You know, I just build the tools and the strategies. I don't have the answers for the best way to use everything. It's just not, well, it's not possible to have a one set fits all systems. You can't do it. I've tried this this particular strategy, the opening range break. As I say, this is a stock trading strategy I learned a decade ago. It's still used today by the person that taught it to me. But this is something that works very, very well when we've got high volatility. But there is never 2 days the same. And do this, and you know, when you run this visually in the strategy tester, you will see and this is how I developed the testing. I've got stochastic on that. This is an old platform I don't use, but you will see there's lots and lots of different things. You like here, very tight opening range break. I tried ATR as a stop. I tried all sorts of things. I tried a parabolic SAR as a stop. And what I found was that virtually any type of stop strategy gives you roughly the same results. Because remember, 90% of indicators do the same thing. They lag behind price by a certain distance. A moving average lags behind price by a distance. A parabolic SAR lags behind price by a distance. A trailing stop loss lags behind price by a distance. Yeah. A stochastic moves up and down behind price by a distance. It doesn't matter what you use to get you out of a trade. You will always, when you're testing, think, oh my God, if I'd only used a 50, I'd have captured that lot. Next time we see one of these run, you'd be thinking, oh my God, if I'd have used a 30, I wouldn't have lost 50. There's never going to be 2 days where one thing works better than anything else. You might get a difference in strike rate between, I don't know, 50 and 100 or something. Very rare. that you'll get something that will give you so much more edge that it's the only thing you should use. And don't forget, volatility is going to change as well. So where a 200 pip stop or a 40, I found a 40 pip stop, 40 point stop, 400 or 4,000, depending on your broker, works very, very well in most cases, but it does give a lower strike rate. But this time next year, I don't know whether the DAX might not even move 40 points in a day. At the moment, we're getting 100, 200, 300 day point moves. We might not get that next year. So again, the stop may have to be adjusted. ATR doesn't work because unless you're taking ATR 1, don't forget we're trading volatility. So the ATR 10 that happened here has got nothing to do with the volatility here. We know volume spikes, therefore candles get larger. So what point is it using that? Why use the volatility when there isn't any to trade a market where the volatility completely changes? ATR was useless. So then I thought, well, I'll tell you what I'll do. I'll drop the ATR down to 3. So I'm using the average volume of those opening range candles. And then what I found was that the vast majority of the opening cash balance goes in the first 15 minutes or 5 minutes, depending on the day. So you get a huge ATR there, and then the ATR shrinks for the rest of the session. So that was useless. So I thought, well, what we'll do is we'll wait until after the first 15 minutes, and then we'll start monitoring ATR. Well, it's pointless because by the time you've got an ATR figure to use, the move's happened. You've missed it. You know, I've tested all of this. I've tested this strategy for months. And I used to trade it years and years ago. It works. It just works. You just won't find anything that will work all the time. Just doesn't. It's just not one of those things. You know, you get beautiful little runs like that. Take them. Take them. And accept that you're going to get multiple of these in one go, but you are going to get then a massive win. Yeah, you can have lots of little stop outs on it. Lots of little stop outs like that. Some days are just going to be horrible, choppy messes. There's no strategy that works there. You know, it doesn't work with mean reversion, doesn't work with breakout, doesn't work with trend. You just can't trade it. There's nothing you can do. Absolutely nothing you can do. Just have to sit there. Today, and I mean, this one, that session there, I mean, literally, there's a double bottom entry there, long. New York opened. New York just went, you know, it's just a rotation day. And again, on the blog post linked from the indicator, from the EA, I explain the different types of days you can have. There is only 2 types of days: a trend day, up or down, or a rotation day, sideways. There's only 2 ever conditions. And that doesn't go for indices. That goes for everything in trading. Yeah, there's a trend day or there's a rotation day. That's it. That's a trend day. It's rotation. That's a small trend. That's a rotation. It's a trend. It's a trend. Rotation. Class that as probably, yeah, that's probably a trend. Small trend day. Trend day. Trend day. Rotation. Rotation. That's all you get. And the trend will either be strong or weak, or it'll be rotation. And the EA can't deal with rotation days. It can trail, so you can get in with a stop loss like that on a short position, but as soon as you identify that you're not going anywhere, you want to be out. It's either going to go or it's not. So on the days that it's not, you keep your stops tight. But occasionally they're going to catch you out and you're going to miss a trend day. So what? Long term. That's what we're looking for. Long-term return. Not looking to be right. I'm looking to make money. Yeah. I want my return on my drawdown. If you're going to use 18 grand of my money, I want 92 grand back. If you're going to use 5 grand of my money, I want 22 grand back. If you're going to use 25 grand of my money, I want 108 grand back. I don't care how you get there, but prove to me by running 4,800 simulations that 3,340 times you can return me some money and not lose me money. That's what I'm looking for personally as a trader. Something that just makes me money long term. Position trading makes me money long term. Is there areas of hell in there? Yes, there's hideous drawdowns in it. But that's the disadvantage of position trading. The advantage of position trading is you're right virtually, not all the time, but most of the time, you're right. Because we can't time the market. The disadvantage of this is high losing runs of multiple trades. There's always a disadvantage and an advantage to every single trading strategy. So I'm just testing this in the tester. Is this, why is that not taking trades there? We've cancelled the, it's not a sell, is it? I think there's a bug. I think we might have found a bug, everybody. That's slightly worrying. I need to look into this morning. Try and figure out. It's on 2. Just quickly test this. Oh, that's weird. Look, on this day, the opening range low was exactly the same level. Look at that for a support. That's nothing to do with it. Yeah, might be a bug on just taking the second opening range, so I need to test that. Which will be annoying because that will throw out some of the testing, but anyway. Right, well, I've not really got anything else to cover today. Covered everything. That's the last live room of the year as well. I'm not trading next week. I'm not doing any lives next week because it's Christmas. And there's no point because it's either going to be a volatile, hideous mess or not. But either way, I don't really want to trade in light liquidity conditions. It's very, very choppy. So I'll be back in January. I will put a note up on when I'll be back. I need to have a look at the calendar. I might do a couple of impromptu ones over the Christmas period, but I should be keeping an eye on everything and working on other things. I've only traded one coin in the crypto market every day for more than 18 months now. I haven't had a red month for 8 months. Developed a unique strategy on a 30-second chart. Yeah. If it works, it works. It's an edge. That's everybody says when you start trading, and if I'd have, it's always the same when you've been trading for a long time. Virtually every trading book I've read, or every video I've watched, or every successful trader that has got any content out there always has either a video or a section in their book where they say, if I could go back and tell myself something 10 years ago, there's always that thing that you're like, I learned this, like this opening range breakout strategy I learned a decade ago. I haven't used it. Now I know what I know. I realize how amazing it is, because back then I was like, well, it keeps losing. It keeps doing that and I keep losing money. So that doesn't work. There's everybody that's making money out there has got a magic indicator that tells them what to do. So I went off finding that. So when you suddenly, the light bulb moment for everybody is always I've got no control over the market movement and I need to find an edge. So the thing that I got told very early on in my trading adventure was you need to find an edge and stick with it. What I was trying to find was an edge that was better than the others. And there isn't one. So if you've got an edge that works on a 30-second chart, the edge is there because the risk reward is there. And the edge gives you a strike rate over time that plays out to a positive alpha return. Yeah, there are thousands and thousands of strategies out there that do that. The problem is everybody picks up these strategies, like this one, right? Go short when it goes red, go long when it goes green. You only took one trade. It was profitable. You are now in a profitable short. So in the last year, you've taken 2 trades on Aussie New Zealand. You've had 1 winner and you're in 1 in profit. Has that got an edge? Yes. Will you trade it? No, because I need to take 10 trades a day because otherwise I can't get a Lamborghini. There's a positive edge in everything. Nobody's got the patience to exploit it. That's the problem. So, the arguments you get, oh, it's short, it's going down to there. No, it's long, it's going up to there. Well, you're an idiot if you think it's going down. Well, you're an idiot if you think it's going up. It's going to do both. You're both right. Just make sure you've got an edge that extracts money from the market. Stop arguing. I'm still messing with the AI to produce one of my strategies. It's getting there, but keeps cutting out due to the overload network outage. Yeah. If you want a strategy that works, go and get. There's so many books out there with strategies in. Go and get Larry Williams' book. It's one of the best trading books out there. And there's a strategy in there that works amazingly. It's called the Smash Day. Developed it decades ago. Still works today because it's got an edge. But you're not going to make a fortune out of it. And this is why prop exists. Yeah. If you haven't got £250,000, which is what you need to make that edge work, go and get £250,000. Make the edge work. But you're not, if you're only going to return 10 or 15% a year out of it. So if you've got a 25 grand return out of a 250 grand account and you're not happy with it, go and get a 500 grand account. There's an edge, but you're not going to get paid every month. So if you're not going to get paid every month, you need 3 500 grand accounts because the ones that aren't making you money, you're going to need to make money on the other ones. And this is where we come back to the having 3 strategies: a trend, a breakout, and a mean reversion. One of them is going to work. You don't know which. So use all 3. Just make sure that the ones that don't work have got a tight stop and manage your risk. The ones that do work, don't put a TP on them, let them run. Yeah. Everybody that took a short on this candle. So the strategy, let's make a strategy up quickly, just before I go. Right. So the strategy is when we get a candle close below the 72 moving average, we'll go short with a candle with a stop loss above the previous high. Yeah. So just in case we get a little bit of wiggle room before it drops, right? If we use a 2-to-1 risk reward, we would have made a profitable trade there. If we hadn't used a 2-to-1 risk reward and we just use a risk, we are in a 10-to-1 short and we're still going. Yeah. TPs are pointless. You get out when you're happy, when you've got enough money to get out with. What do you need? This is why risk-reward based trading doesn't work. And you'll notice there is not one set file I use that uses this. Everything is set to 10,000, i.e. infinity. Don't care, let it run. Because I've got no idea where that's going. Well, all I do know is when it goes, it goes. So I'm not going to get out of the market. The market will tell me when it's finished. And it'll give me whatever it gives me. So yeah, using a risk reward has an inherent problem, and this is why the Holy Grail hunt exists. If you use a risk reward and it works 5 times, you're happy. If it fails 5 times, you stop using it because it doesn't work and you go and find the next strategy. This is why the Holy Grail hunt exists, because we cannot take losing runs. Yeah, you're gonna get it. We get it with every strategy. As soon as you just admit defeat and take it, it just works. The edge is there. The edge is there on that strategy. You cannot deny there is not an edge on using moving averages. There is an edge. You just can't be bothered to let it play out because it takes too long. This is why trend traders struggle, because you with a trends trading strategy, you're going to get a 20 to 30% strike rate, which means 70% of the time you're losing money. It's painful. And then when you're making money, your entire being is telling you to take it because you're making money. So you never, ever let a trade finish. Look at me this morning. I didn't let it finish. I would have got out there. That was my exit candle. So that would have been my exit. So actually, I did better this morning than I would have done. But that was my exit candle on the strategy this morning. But if I'd have used, again, look at it, right? That's a 15. If I'd have used a 20, I'd still be in the trade. Oh, no, I wouldn't. Actually, I'd have been out in the same place. You know, the difference between using a 50 and using a 20, 15 and a 20. You know, there's very little in it. And that's absolutely proven in this spreadsheet. Yeah. There's the 20 moving average. There's the 15 moving average. Doesn't matter if you use the 15 or the 20 in that particular case, you'd have made somewhere between 20 and 30K. What does it matter? Use one or the other. Pick one. Plenty of choice. I found my turning point came when I finally developed confidence in my strategy to stick with it. Exactly. Yeah, there we go. It's just what I just said. There was a large amount of money on the line. Takes time to develop confidence. Yeah. This is a journey. No, I know very few people that have become profitable in less than 4 years in this. Very, 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 very few. Took me 4 years to break even. Because it works. You see people producing results, but you can't produce them. And when you realize that it's not down to the strategy, it's down to you, that's when it starts to click. It is you. You're the person that presses the buttons. Take you out of the equation and your strategy will work. You give me any strategy and I can give you a positive backtest on it. You put a human being in front of that, pressing those buttons, it will fail. You give 10 people the same strategy that's produced 10% return for 10 years, they will all make a loss with it. It's a human thing. It's not a strategy thing. All strategies work and all strategies fail. That's just the way it is. Fair enough. Not meant to criticism. Yeah, no, I'm taking it as a criticism. It's it's just one of those things. It's trading, unfortunately. And that's the bit that kills you. And this is why the 5-minute chart I think is the hardest. Scalping is the hardest thing to do. Not, as I've said before, 90% of the people I know that make money use the hourly and the 4-hour charts. Because down here you are literally trading algorithms and people's feelings. You're trading nonsense. This is nonsense. If you look at it, you look at this same chart on the 4-hour, you can see very clearly this thing's coming down. You look at this thing on the 5-minute chart, it's just a mess. It's going up, it's going down, it's going sideways, it's going up, it's going down, it's going sideways, it's going down at the moment. Sideways, it was going up, but it's not, it's going down, but it was going up there. 5-minute is just algorithmic sentiment, order taking. It's just mess. So you can't have a bias on it. Just doesn't help. If this thing's going down, get on it down. As soon as it does that, it's going down. Most of the time. It's an edge. The edge is literally just following the market. And that's what that does. It just follows the market. This is the big players. These moving averages are the big players. you follow the big players, you've got a very, very good chance of it working, haven't you? Because you ain't got the money to move it. So. Anywho, so that's really it. I will be back in January. Anything you need, I'll be in the Telegram group. I will do a little bit more back testing this morning. Just find out why the EA didn't fire this morning, and see if I can figure out what that was. Which is weird. The fact that multiple people have had it means there's definitely something in there. So I need to find out what that is and get a bug fix out. But yeah, anything you need, I'll be in the Telegram group as usual. I'll be monitoring that all over Christmas, but obviously I'm not trading, so I should imagine it'd be quite quiet in there. But good luck if you are trading next week. Be very, very careful with the news next week. I'd say with the Japan news really is the only thing we've got to worry about. Everything else is pretty weak, apart from the CPI figures for the CAD. But it's going to be a volatile week, I think. There's always light liquidity, so just be very careful if you're trading. You may get slippage and you may get big ADR hits. It doesn't mean you need to revert them necessarily, but we'll see. Right, so have a good one. I'm only scalping, but I certainly can't do it long term. Yes, too draining. That's exactly right. So have a good Christmas. I will be back January, but I'll be in the Telegram if you need anything. Might do some impromptu stuff over Christmas. We'll see. I need to do a video on the opening range breakout strategy, so might do that as a live, and then we can get questions and things while I'm doing it. Always nice to hear about others' trading struggles. Everybody's got the same trading struggles. Everybody. There's very few people. There's very few things that actually cause you problems in trading, and I list them all in the Boocamp. Go and watch the Boocamp videos on YouTube. I list them all. We all got the same problems. You just need to identify which ones you're particularly bad at, and then sort those out. And that's it. That's the key. Strategy is not the key. The indicators are not the key. They help, obviously, a lot, but it's actually executing the thing properly, which is the problem, and that's an internal issue which you need to sort out. And everybody's wired different, so which is why we go up and down, isn't it? Yeah, if we were all wired to buy it, we would never go down, would we? Everybody's wired differently, which is what makes the market go up and down. It's run by people. Anyway, I will be back January. Have a good one. Be in the Telegram group if you need me, and yeah, have a lovely Christmas if I don't speak to you before, and hopefully it's profitable, and I'll see you next year. Have a good one.